doing? Good afternoon to all of you. Good afternoon, Luke. Hello there, Scotty. Good morning, Nadia. Oh, good afternoon, sorry, Nadia. Good afternoon, James. Good afternoon, Braden. Good to see you, mate. You took that W on the UK footsie. Wonderful. I'm glad to hear it. Yeah, good stuff. Hey, TJ. Good afternoon, buddy. Yeah, the W reversal on the UK footsie was decent. Yeah, it was really nice. Yeah, yeah, it was. Yeah, it was really nice this morning. European Open, like I said, it was bloody good. Yeah, it was really bloody good this morning. I didn't bother catching a single bean out of it. Not a single one. But no, it was good. Good afternoon, Michael. Good to see you, mate. But yeah, it was a good session. It was probably a great session because I wasn't in it. It seems to be the way at the moment. Yeah. So really nice little V reversal here on the DAX. Powered down, breaker structure, powered back up. And just like Scotty D said as well, that UK footsie, that was some decent trading. I mean, it really was. That was some really, really decent trading. W reversal, beautiful breaker structure, powered straight the way up. You're out of the market 82.57. M reversal, retested the M reversal, back in the market at 82.45. Out of the market at the previous lows at around 82.18. It's really, really great patterns, really good success rate in the patterns as well. I would say, yeah, all pretty decent. And they've continued to be okay as well. I mean, we did take a little bit of a breakdown here for a while. We actually got a bit of a fake out that previous low. But then we ended up having this nice little rally in here as well, which is probably a decent 1 to 2, maybe a 1 to 1.8, depending on where you actually started participating in the move. Got to be honest though, guys, it's a little bit late in the day for the European stocks, isn't it? 1 o'clock. A little bit late in the day. Right. On that note, let's get on to the markets then, see where the money is today. So we are starting today with a completely fresh book. Thank God Brent last week did come to a close on the early Thursday. No, what was it? Late, very, very late on Thursday evening. And so we are completely clear. That was the last thing that we had in the books. So let's pop up to the old dailies, check out where we are. So oil first of all. Basically, this is the trade that we ended up taking on the 15-minute time frame, this price action pullback here. We were taking it based on the proviso that price had traded down to this large level of liquidity and was bouncing back from it. Interestingly enough, however, this is a really, really interesting point where oil is traded into. And so therefore, as we can see here, price actions come up. We've gotten into this sort of 75-ish area. Lots of money in the market here, of course. We can tell from these 2 points and the points that came before it. And we have started to see some resistance. So we've got this now underway. Now there is a decent breaker structure here. You guys might be able to see it. It's actually in here. So if we were to get a breaker structure underneath at this point, we would then essentially have a relatively good path of least resistance down to around 72. Which is exactly as per the plan that I said after taking the long in oil and traversing our way all the way up here. It's now time to short oil all the way back down to the 72 area. And so the entry criteria for this one are relatively simple. It is a pending order. It is based on a reversal from this area up here because of the institutional selling power that we believe is going to be pushing into the market. And we're looking at an entry point of around 73.88. A target profit down here at 71.80-ish, and a stop loss 50% point between these two at around there 74.73, and that's going to yield a 1 to 2.5-ish return, and that'll be that's not going to be too bad. 0.6 I think it is roughly on the return side, so not too bad at all. So let's get that one booked in and move swiftly on. So looking at gold, that's fine. We've got nothing in this one now. So gold incredibly traded up to the high of 26.31. Amazing, absolutely amazing. We open up Sunday evening, Monday morning, we're already looking pretty good, opening up at around 26.20, and then we just push on to make another fresh all-time high. Gold investors at the moment are going to be laughing and having a really good time of it, obviously. Now, looking at the daily time frame, there's never going to be much to see because we are trading at such an elevated level, but we are looking at those fresh points of liquidity every single time to sort of ascertain where the market could potentially be pulling back to, when it's going to be pulling back, and so on and so forth. Now, this is a pretty big breakout, same as the last one that we had. We had a pretty big price action pullback, to be honest. It didn't quite come down to where I would have deemed to be a decent retest area, but this is still looking relatively good. So now that we can almost build that trading margin, right? Looking for a breaker structure point, you would probably say that the BOS is going to be here. Problem with that, of course, is we have that low, and the market does comfortably stay below it for a little while before rejecting, come back on top again. Now, this is quite a successful trading margin in terms of the fact of the sort of yield that we have available, right? So it's not too bad at all. I like what we've seen here. This is pretty decent. We have a three successful wave completion between these two areas, but we do have this to contend with. So for me, there's going to be another pending order trade, and we're looking at that being the breaker structure. So I do want to see that low cleared, and then we're looking at the target profit at 26.03-ish. And the stop loss, let's line this up quickly. So target profit and the stop loss. I'm probably going to have the stop loss at the belly of this zone above because the risk reward is just so high. So we're probably looking at a 1-to-3 risk reward ratio on that gold short. Now, if you are gold long, just like we always do at all-time high trading, it's going to be fixed 1-to-2s the whole way. We don't want to push our luck with a 1-to-3 because we are looking for that probability, the likelihood versus the positive risk yield. So if we get a breakout, it's a break, close, and a retest, followed up with a fixed 1-to-2 set and forget trade idea, which would probably look something like this. Something like that for the long. Essentially in here is representative of a no man's land, but the margin to trade is good enough for you to actually participate within these two margins as well. So you do have the ability to trade a breaker structure from the low to the high. Something like that, for example, for a 1-to-2, and vice versa on the short. So your breaker structure point probably going to be about there for the short, and so therefore you will be taking the short from this point on. Your stop loss at the belly of the zone above, target profit there, that's going to yield you a 1-to-1.8, which is absolutely fine to take as well. So good couple of trading opportunities in the middle. You've got the bigger ones on the outside, obviously they're the nicer two, but you do have the ability to trade in here because the trading margin is good enough. So we'll start tagging some of these up. That's fine. Okay, Aussie CAD. Still looking very bullish at the moment. Daily time frame is indicating possible reversal. Haven't seen any significance here of breaking free of the previous high just yet. We've sort of nudged it, haven't we? We've had a little bit of a nudge above the previous high, but we haven't had anything major. Target profit for the potential rejection of this one is going to be down at this area in here. So that's going to be your trading margin if you so wish to trade Aussie CAD short. If you do not, then it is going to be a full break, close, and retest on this one. And to be honest with you, a 15-minute time frame isn't going to cut it. This is a massive inflection point. There is no doubt about it. The last time the market was up at this area here, we reached this high. It was followed up swiftly by a 4.45% drop for 411 pips down. So we do want to see the full daily breakout. Now on a 15-minute time frame, you will be able to potentially take a 15-minute BCR and then a 15-minute 1-to-2. Okay, but if you're looking for anything more than that, it is the daily breakout retest, that you want to be looking for. So ultimately, looking for this area here, break, close, retest, and then a fixed 1-to-2 on the other side of that one. Yes, something like that. That's what you'd be looking at there. And then what this will look like on the daily time frame is essentially representing the daily breakout. The retest then will come down from the 93.20 area back into liquidity at 92.80. Once we then fill our boots up and the banks get on board, we then either see the fake, it'll then either end up being a fake out and the market will dump back down to 92, or it will be the trend continuation that we believe it may, and continue upwards of 94.20, which is the next prime cash-rich area based on the previous price action. However, if we do get the double top rejection, which is really open-ended at the moment. I mean, we've got a really nice double top here. We haven't really traveled far below that point though still. If we get a rejection of this area, I mean, really what we're doing here is we're trying to find a breaker structure point. So what we would want to see is the price action. Let me path this up for you guys. We've come from here. We want to come up here. We want to break through this structural point, so possibly about here. And then you take a short from sort of just below this level, and then you come down to this area down here. And that's what you'd be looking for. And that might be quite a nice trade idea. We can't put a pending order in there yet because I want to see price action come back up to liquidity. If we fail to break and close above on the third attempt, you know, guys, we're looking for that. We're looking for quite a strong move in the opposite direction. So it's really going to be on the proviso that we reject this for the third time. That takes place. Brilliant. We're quids in. But for the time being, it's just a monitor. So I'm going to tag that as blue as well. Aussie yen. Yeah. Let's have a look daily again. So there's a lot about the Aussie yen that I don't really like at the moment in terms of consistency. We've got this area in here. We've got this big jump up. And this is where price action is rejecting in the moment, which is kind of in between these 2 points. If I look back in time, where this is topped out, we've got this area in here. Right? So we've got this area in here, which is where it's sort of rejected. We've got the break, close, and retest 1. We've got the break, close, retest 2. We've got the rejection there. So that also is a large level of liquidity. So we've got lots of different points, these technical points, lying all around here that we're trying to navigate, which makes it a very, very unclear path of least resistance. Now, if you want to take a short in the AJ, we've got this level, bear with, we've got this level in here-ish, right? And that doesn't really correspond to what we've seen in this area, but it does to what we've seen recently. So then we have this kind of, this little bit of a range before we get this big fake out. And that is a fake out. Really nice big fake out. Big extended move. Lots of people loading up on longs. And bang. All get taken out in a shot. So 15-minute time frame. We then look to see what we're dealing with on this sort of lower time frame chart here. And you can see that actually we've made ourselves not a bad trading margin. So if we're looking for a rejection of this area here and here, this is not too bad whatsoever to be trading between. Now, we do have a lot of Aussies, obviously. We do like our Australian dollar at the moment, don't we? We've got, CAD, yen, New Zealand, dollar, euro against the dollar down here as well, pound against the Aussie dollar down here. So it is one of it is a popular one for us at the moment in the way that we've sort of built this asset list. So, we want to take it kind of with a pinch of salt, but I think personally that this has a decent trading margin and is worth putting in the pipeline. So short from here, long from there, looking at the breaker structure areas. If you're really, really confused about where your breaker structure area is, probably going to be this tiny, tiny little area in here. So something like that. So then if you want to take it below there, you're then going to be bringing that down to there, and that's going to be your 1 to 2.5 in that space, which, let's face it, that can be done in the space of a half an hour. It could be done in the space of a couple of hours. But regardless, it's got quite a lot of success. We've had 1, 2, 3, 4, and 5. All trades of which you would never have been stopped out once. And so we're going to continue with that motion for the time being. Aussie  I'm afraid not. Not right now. Aussie dollar. Yeah, I'm afraid not. I mean, it's an okay range, but we've got a lot of inconsistencies in where the bottom takes place. Yeah, in particular. So we've got low one, low two, which is great. We've got low one, low two, which is great. Low three, which is great. And we've got high one, high two, and now high three, which looks like it could be breaking above high one and high two. So it's just inconsistent in where we would look to get involved. Also, I believe from memory, if we look at the daily time frame here, yeah, so daily time frame jumping up to this high. Now, it's open-ended where we would be looking necessarily for the liquidity to be, whether we would have that here, which would make us have probably a decent trading margin, or whether we put that in here, which is where the real tops of the bodies of the candlesticks are. Because if that's where we're going to have our liquidity, which is probably the safest place, that means that the price action is trading directly into it right now, which is what's been causing the topping out effect of this. So even if the market breaks above the previous high, we don't have a clean path of least resistance until we're breaking free of 68.65. And we will be looking for those rejection trades. Right, let's have a look. CAD Swiss. Nice floor, nice ceiling. Very, very choppy, ranging in volatile market state structure. Don't really like the inconsistency of the high. More of a descending format here than we have a range high. So if we look at that in the CAD Swiss at the moment, that would probably be more precise and refined than using a level of liquidity the standardized way that we usually would. So then the trading margin becomes between the white level here and the grey zone down here. The break of structure point for an entry on this one is probably going to be somewhere in there. So you'd probably be looking to sort of call this the no man's land. Price action comes below there. We have a TRF situated at around 62.35, followed by another path of least resistance, ultimately back down to around 62.070. And that's a really, really solid trade. Really, really nice looking trade. In terms of taking the breakout long on this one, I'm not a huge fan. The cash area here is probably going to be about there. And that's not without its own set of ambiguity, to be honest with you. Looking at previous price action, it's not completely clear. But if we do get the breakout above the white descending level, you've not got a great size trading margin before you get to that area there. So if you look at the break close and the retest of this descending level, which is what it will require, you're probably going to have your stop loss. You're going to have your stop loss about there, I would say, and even that's cutting it close because you've got the highs of all these moves, which is about here, but you have to wait for the break close retest to take place, the continuation. You may get yourselves a bit of a more refined entry if you wait. Stop loss, nice little margin below that zone there, probably at around 62.75-ish, and then your target profit's going to be down there, and that's going to yield you guys a 1 to 1.7. So you're really quite sort of on the cusp there of our minimal risk return yield on the position there. So yeah, I'll leave that down. I'll leave that down to you guys to do with as you wish. For me, probably going to sit that one out. In fact, I'm telling you outright, I will be sitting the long out until we get a breakout above 63. But for the short, I'm all in. I'm really, really liking the short. That's definitely going to be pending order material. Looking for that breaker structure below the 62.57 area. Yeah, on that one. Right, guys, just give me a sec. I'll be right back.
Hello, sir. Hello, mate. You alright? Yeah. Come on,
Awesome. Cheers, you too. Hey guys. Right, yeah, so that's where we are with the CAD Swiss. So what time are we on? 2 o'clock. Okay. So CAD against the yen. Nah, Not entirely at the moment for me, I'm afraid. Actually, maybe, actually, let me look at the margins quick and see if this works. So we've got floor there. We have the rejection here. And we have a high there. But we do have a big TRF. And that is a really big one in there as well. So I need to highlight that for my own sense of spatial awareness. All right, let's have a look on the 15 then. Yeah, okay. I mean, this could certainly work. Yeah, this could certainly work. Okay, let's have a go at the CAD yen then. So, CJ at the moment, clearly double bottoming out on this area in here. Let's just go back in time here for a moment. Doesn't seem like a huge place of liquidity, but I can't ignore it because it's got a W reversal literally forming before our eyes right here from that point. And so if I'm going to be talking about high probabilities, I have to take that into consideration. Now, based on that, the margin to trade is really nice. We get a break of structure down there. Target profit is going to be top of the zone. Stop loss is going to be 50% point between these two areas, and you're left with a 1 to 2.5. So that's a really decent trade. Pending order material. You do have a TRF. And TRF is kind of around this area in here. It's not super duper clear, but it is there. For the long, this 107.60 area is such a big TRF. I would actually classify that as liquidity itself. Yes, it's not the major point of inflection, but it is a point of inflection. So for me, I'd be looking at a breakout, retest, sort of area, structural breakout, probably going to be situated at around this area in here. So let's say, for example, I reckon the break, close, and retest will already take place of the level that we're looking at right there. So a break, close, and a retest of this area. The breaker structure will take place up here. We already would have got done with the entry criteria there. And so therefore you'll be left with a trade idea that looks sort of like this for the long. Again, similar to the Aussie CAD, the margin, no, sorry, not the Aussie CAD. No, it was the Aussie Yen, wasn't it? Yeah, it was the Aussie Yen as well. Yeah, I don't know how that makes me feel. It doesn't make me feel better about the situation. I was going to say that these two margins are nice to trade on their own. Because it's large enough, right? It's not bad at all. But I think I'm probably going to avoid the trading in the margins here. I think the Aussie Yen is nicer. It's also smaller, which means we're exposed to the market less so. So the no man's land trading opportunity on the Aussie Yen, is better. And then when we're considering the CAD Yen, we're looking at the two trades on the outside, here and here, which is good. Now Euro Oz, that's dying a death, but amazingly down to the previous low in this area, so that's really nice. Look at the daily time frame just to get a good idea of that inflection point there. So yeah, that's no joke. That looks really nice. We drag that right the way along as well. That's a big one. Oh yeah, right the way along. So yeah, that's a big inflection point on this daily time frame. We have a decent level for a target profit with a TRF there, but a decent level for a target profit short, and we have a really decent level for a target profit long. So let's just mark this out quickly so the 15-minute time frame will show. Let's make that a bit wider. That can sit on there. We then have where would we go for the long TP? The long TP is looking very long. So I'd probably just shave off the tops of a lot of those moves for the sake of probability. Put that there, 15-minute time frame. Yeah, so that's a pretty big trading margin. I mean, just to put things into perspective, the long there took over the course of 8 days, and the short was even more at around 10 days. I believe 11 days. So yeah, it's gonna be a big one if we decide to take it. It's at an area at the moment which would certainly be good for taking it. The break of structure for this one is not going to be a little ways into the move already, but that's a good thing. That's not a bad thing. So I'd probably be looking at the break of structure entry for this one about here. And then we'd be looking to take that trade idea above this area then all the way up to this area here with my stop loss at about 162.80-ish. So if I bring that down, yeah. So I'd have my stop loss at around 162.80. Now this 162.80 area is obviously, you know, lower than the 50% point and not quite on top of this area. But if we look at these areas in here, right, and I drag a zone across there, we've got that one there, right? So we can kind of, you know, get through that. But also we have the midpoint of the W reversal, which you guys might not be able to see very clear. That's at that point in there. We also have the retest of the W reversal midpoint, and we have a floor that was formed directly after it. So then if I zone in again underneath this area, and I then drag that straight across, we have all of it inside that stop loss, and it's still yielding us a 1 to 3.43, which is a fantastic risk reward ratio. So that's a decent trade idea in there for that Euro Oz. Now the short is whopping as well, but unfortunately I can't find too many intricacies on a 50-minute time frame. This one here is being probably the leader in terms of those decent breaks of structure area that you're looking for. In fact, looking at that one right there might be even better. Yeah, in fact that is. So that's the one we'll work with. So, break of structure for the shorts. Short, entry, target, stop loss. And that's looking at a 1 to 2.54 based on, yeah, that's 0.25%. So yeah, not too bad at all. Couple of really nice trade ideas there in the Euro Oz. Right, I'm going to move on now. Yeah, I don't want to do any more CAD or any more Oz or any more Yen. So let's have a look at NZD Swiss and NZD USD. NZD Swiss. Okay. That doesn't look too bad. Two seconds, guys. Alright, so I like this. That's nice as a floor. Good area for a target. And we've got this area in here. It's the current high. Yeah, so that's not going to be bad. That's a decent trading margin. So what we're going to look at here, break of structure, entry, target, and stop loss for a 1 to 2.55 as well. So honestly, what I expect, price action breakout, and then comes back down. And in the space of that, we've taken the trade. Now, we do also have the potential for a short here, and make no mistake, it's a big short. Now, you don't have to take it to any, you know, you can take it to any of these sort of inflection points as you like. The main inflection points, I mean, you've got a really big one in here, don't you? Really big. That trading margin is extremely large. I mean, we're talking larger than the Euro was. So what I'd be doing is looking for the median of these 2 points. So you've got sort of median high in there, and you've got median low in here. And they're your kind of 2 medians where a lot of the bullshit takes place, right? So then this becomes your new trading margin. Whoops. Yeah, so then this becomes your new trading margin. Now you've actually got a median of this area in price action as well, because you've got this area in here, right? So now you've got an even smaller trading margin. Now this is a TRF. You can trade right through this and hold on down to 52.80. Or alternatively, you can look at the breaker structure point here, and you've got the ability to lock and load a trade from there for a 1 to 2.1. Now, let's say for example you can manage the trade out down to this area for a 1 to 5, absolutely fine. So that works as well. You'll have an even nicer risk reward ratio. Yeah, but that NZD Swiss, not too bad, guys. NZD dollar. I'm not really liking that either, I'm afraid. Very, very similar to the Aussie dollar. It's a ranging market without a shadow of a doubt. You know, there's no question about that. But it's, yeah, validity is not that great. So yeah, I'm gonna probably give that a miss. How many trades have we got to work with today? We've got UK Brent short, gold either side, Aussie CAD either side, Aussie Yen either side, NZD Swiss either side. I swear we had one of these, yeah, CAD Swiss, that was long, wasn't it? So CAD Swiss long. No, it wasn't CAD Swiss long, it was CAD Swiss short, wasn't it? Yeah. Yeah, CAD Swiss was short, sorry. Long for you guys, possibly. We had the CAD Yen on either side of the market. We had a Euro Oz long and Euro Oz either side of the market as well, wasn't it? On those breaker structures. That's going to take a while to complete though, for sure. So you can sit and chill with that for a while. Yeah, that's an extended move. I don't like that. No. Okay, yeah, well, that's enough. I think that's enough to work with so far. I mean, you can quickly look at the USD CAD. No, that looks like a murder scene. USD China, yeah, looks okay, but unnecessary right now. Right, no, I'm going to leave you there. No, don't worry, I'm not going to get off the stream just yet. We'll do the US stocks, of course, but leave it there for the commodities and the FX space. There's a lot of work for you guys to get on with in terms of analysing, assessing, plotting, and scheming. So I'll let you get on with that, and then we'll go down here, we'll cover the US stocks, and then we'll call it a day and see where we go. So, US stock markets then. First of all, NAS 100. The NAS 100 at the moment, very, very range bound. On the daily time frame here, we are trading up against a major block. All right, this area in here, this has got a shitload of money going into it. Now, what we are waiting for is either the banks to start shorting the crap out of it, or we're looking for the breakout and to start striking some fresh interest, especially considering the Fed just cut their rates 50 basis points. You do have to remember, though, the 50 basis point cut came as a mega surprise and does lead everyone into the thought process of they're trying to avoid a major recession, which isn't going to be good for something like the US stock markets either. So it's a real double-edged sword at the moment for market sentiment in terms of the sentiment. So what we're looking at today really is, you know, your guess is as good as mine scenario. I don't know which way the market's going to break out. And the 15-minute time frame is unclear in terms of the trading margin specifically, but I would like to think that we will be utilizing some of these sort of extreme lows that we've had So even though it's going to not look pretty, I am going to be aiming for a short down to around this area in here for the NAS 100. Based on the 1 minute chart, you will be looking at a break of structure for this one of this area in here. And so therefore your trading margin for this is going to be pretty good, not too bad. You'll be looking at around a 1 to 2.45 possibly for the NAS 100 short, but don't worry, yes, that is a 1 minute trade. I'm just knocking this out on a 15-minute chart. So that's the potential for the NAS 100 short. If you want to take the long, it's simply the other side of the market from where we're trading at the moment. So that's going to be a long outside of this area, and you're going to be looking at the long to the previous high. So long upon the breakout, stop loss at the 50% point as we always try and do, and then of course you're looking at this area of liquidity for your TP. So that's going to be there, and this is going to be about there. So that's yielding a 1 to 1.76 at the moment. Obviously 1 minute time frame, break of structure. I have no doubt in my mind that you will be able to pull a 1 to 2 out of that one. No doubt in my mind, or at least a 1 to 1.92. So that's the NAS 100 setup. Looking at the Dow Jones here, so clear up some of these mess. So yeah, I mean, this Dow Jones looks even worse than the NAS 100, to be honest. It looks horrendous where it is at the moment. We do have broad strokes ceiling and a broad strokes floor. Obviously, we are just really simplifying the process here, looking at the extreme lows and the extreme highs for our inflection points. There's no way on God's green earth I'm looking at taking the entire margin today. It is just a Monday after all. But I probably would be looking at something like this for the trading margin, the actual trading margin. So let's say, for example, anything down here is scrap metal. You can and do have the capacity to hold on to trades down here, but the likelihood is you're probably going to see wild volatility swings coming back from there halfway through. So just be aware. So based on the fact that this is the trading margin, break a structure for this one, unfortunately, because of where we are at the moment, it would have been here, which is a really nice breaker structure point. But we haven't got it into liquidity enough for that to be the one. So we're actually going to be looking down here, and that's going to be the breaker structure. So this is going to get a little bit convoluted here, so just please follow along, and if you have any questions, let me know. First of all, if the market in the next, what time are we at now? 2:15. In the next 15 minutes, if the market comes up to anywhere in here, this is your breaker structure level for the short. Only on the proviso that we come and push up into liquidity. Okay? That is the breaker structure that you'll be going for, and you will get a very, very nice risk reward trade out of it. If the market doesn't go anywhere but where it is right now and then breaks short, this is your breaker structure zone. Okay? So your trading, your risk reward yield is not going to be as good, guys. It's going to be okay, but it's not going to be as good, because for a trade idea like this, you don't want a stop loss that small, and so therefore you will be in a position to put the stop loss at the belly of the zone above, which means you're going to be yielding a 1 to 1.8 approximately. However, again, if the market pushes high first, then your trading risk reward yield will fly up, because then you're going to be going from a 1 to 1.8 to a 1 to 2.5. It says a 1 to 2.7, but I think it's probably safe a 1 to 2.5, which is significantly more than the bottom one yields. But beggars can't be choosers, and so we're going to have to do whatever the market gives us. So just beware, be aware of that. Now, you will have noticed, obviously, I haven't given you a long trade idea today for the Dow Jones, and that's the way it's going to stay. If you are bullish the markets today, we are going to be bullish in the US tech stocks. It has by far the better breakout criteria. You don't have to have the stop loss where I've got it. It's a pretty bloody healthy stop. You could have the stop loss comfortably at 1989 for a 1 to 2.3, and that's going to be absolutely fine and adequate. It is the stronger of the two charts, again, by far. Definitely more refined and clear trading margins, better path of these resistances, and so on and so forth. The Dow Jones looks like hell on earth, but if you do want to trade it, then that's the trade that's available. And I'll wrap things up their team. So does anybody have any questions? Or are you all clear and ready to go kill it? Getting the week off to a good start. All right. Good job, Nadia. Thank you, Scotty. All clear. Good, good. All good, Michael. All good, Paul. Wonderful. Okay. Awesome stuff, guys. Well, I guess then it's just time for me to say good luck out there today. Trade safe. Follow the plan. Trade the plan. And I look forward to catching all of you this afternoon and again tomorrow as well. So have a good one, guys, and take care, and I'll see you then. Bye-bye.